Hello, listeners, and welcome to the Cognitive Dissidence Podcast, or as I like to say, the artist previously known as the Perch Pod. Joining me on the podcast today is Robert Larity. Rob is the founder and chief investment officer of Cognitive Investments. He's also the director of research and a partner at Off Wall Street. We're going to try to do these sort of weekly roundup podcasts where he and I just check in about markets and about geopolitics every week. I can't promise that it'll be every single Friday of the year, but we're going to try to do as many weeks as possible. Let me know how you find this podcast. Rob and I had a really fun time with this first conversation. I think it's going to be a really informative piece of content going forward. But as always, we would love your feedback. Thanks for Rob for taking the time. Otherwise, Rob and I recorded this podcast on Friday, April 29th, and we recorded it honestly as an experiment. It was a sort of beta version or a pilot project for whether this was the type of show that would be good. I love the content so much that I still wanted to put it out. I thought it was that good. But going forward, we're planning to do this every week. So we will record on Thursday afternoons or evenings, and we'll put this out on Friday, and it'll have our updated thoughts on what's going on in global markets, geopolitics, and global macro. So we hope you enjoy this one that's a week old, and going forward, we hope you look forward to these weekly conversations between me and Rob. So cheers. Thanks so much. Talk to you soon.
So I don't know where you want to start. Maybe we could just, I was wondering kind of what stuck out from you in markets this week, because there's been a lot of like geopolitical things happening this week that I don't think are directly market related. Maybe one or two are, and we can talk about them. But I was wondering kind of what you think the biggest takeaways from the week are, considering it's been such a topsy-turvy week.
Yeah. Well, it's funny because I mean, you and I kind of do our separate things during the week and we touch base on certain things. But it's interesting to see how we both kind of burrow in our own niches and then bring them together, because a lot of the market things that I'm focused on wouldn't seem to have direct geopolitical implications and vice versa. But then we end up talking about things and we sort of see the connections forming where it wouldn't be obvious that they would show up, you know? So, you know, in markets, it's a very busy week, especially for us because our earnings season has started in earnest. So, you know, personally, I and the team are focused on watching for two big things in particular. You know, some of the early consumer names are reporting. And the big narrative around the consumer has been this shift from buying stuff to buying services. So during COVID, everyone was locked down. They were all investing in their homes. They were all buying RVs and ATVs and, you know, decking out their gardens. And now a lot of that is really starting to roll over, which you can see in a lot of these stocks have gotten clobbered in the last 3, 4, 5 months. And the narrative is about people switching to services and travel and experiences and going to concerts and the sorts of things that you couldn't do for a long time. So so that's something that, you know, I'm watching with particular attention. And it's kind of interesting because there was some expectation heading into this earnings season that some of these durable goods companies were going to be not quite as bad as expected. And a lot of those seem to be getting disappointed. So you're seeing companies like, you know, Sleep Number mattresses, that sort of thing coming out. And those stocks are continuing to get clobbered. So there's no question that there is this kind of move away into, you know, travel and experiences. But it's kind of interesting because even within that, you see this dichotomy, right? Because so the first hotel stock to report their first quarter earnings was Wyndham Worldwide. And they had a pretty good Q1, but most of their business is tied to the lower end consumer. So they do the roadside hotels where, you know, you're driving on the highway, you're going to be stopping in at these places, you know, because you're taking a road trip, not because you're going to some, you know, sort of deluxe foreign destination. And
am I right in thinking that it's like the Schitt's Creek of hotels? Is that what we're talking about?
Yeah, basically. So they bought La Quinta, which is actually a really good brand, but they have it's hotels like that where they're all bunched together in a group right on the side of the highway. You can choose; they're all right next to each other. Basically, Wyndham was the first one to report, and their Q1 was pretty good, but it was notably weaker than the fourth quarter of last year. So you're starting to see signs of the lower end consumer getting pinched by inflation. We track like gasoline consumption and miles driven. If you go to the Federal Highway Administration, you can track that week by week, and you can see that that's starting to roll over again, really for the first time, since COVID. Like, we had been on a steady recovery, and now we're starting to roll over again because of presumably gas prices, which is really interesting. So all these data points coming in, on that part of the economy weakening quite a bit. But then at the same time, so I met with someone in our network yesterday who owns a lot of Airbnb properties in very high-end urban areas on the East Coast, in one East Coast city in particular. And he told me that his business has been absolutely booming. And this is high-end stuff. It's urban travel, a lot of foreign travelers, with money, that kind of thing. And this person said that he thinks his business is going to be up something like 75% compared to the pre-COVID year of 2019. So there's this big divergence happening, which is very unusual, and we're trying to wrap our heads around it, where you have, higher end consumption, especially around services, really booming. But then, at the lower end of the income spectrum, people are getting squeezed. Their budgets are getting pinched. Their confidence is getting pinched. And how that plays out in aggregate is a little bit tricky to figure out.
Yeah, I'm sure you saw that Fauci said that the U.S. was like exiting the pandemic phase or something of COVID-19. I don't know, but I wanted to when you were talking, I mean, do you think we're just done with COVID? Because one of the weird things for me is that, at least, and this is just anecdotally, but like my mother-in-law has COVID this week. Like one of the guys that works with me has COVID this week. It feels like everybody is suddenly getting either breakthrough COVID or other COVID, and like it's all coming back. And people just don't seem to care. Like, I was at the Pelicans game last night, no masks, like everybody just chilling. It was completely crowded. Do you think we're just done with COVID as a thing, or do you think it could come back and hit some of these trends that you just talked about?
Well, to some extent, it can come back, sure. In areas where you have really severe breakouts and people do have to change their behavior. And obviously, you could see what's going on in China right now, and that's a different environment. But for the most part, I think people are just done with it. There's a certain, we talk about the news cycle a lot here and how that kind of reflects in market prices and that sort of thing. And it's all about, what are people paying attention to? What are they focused on? What are they worrying about? And there's only so long that you can beat something into someone's head before they just become immune. And people don't think statistically. They don't think about, okay, well, the risk of me going out and contracting COVID is X, and the severity is likely to be Y. Human nature is to kind of gloss over that and have an emotional approach to things, and I think that's what we're seeing is, people are just done, and unless there's a real step change in something, which doesn't appear to be very likely, I think that has to be the working assumption going forward.
Yeah. It also feels like we're kind of done with the Russia-Ukraine war, in a sense. Like, it held people's attention for about a month, 6 weeks. Those higher gas prices are in part due to the war, but like all the doomsday stuff about the war hasn't really come to fruition yet. But it has like kept prices elevated, and now it's just kind of going on in the background, and everybody's going about their business again. So, and to your point, I guess things can only really stay in the cycle for a couple weeks at the most.
Yeah. And when the war first broke out, you saw base metals and gold explode in price. And since then, the assets that have been falling back and digesting are the ones that had the initial bolus the most. So look at gold, for instance. Gold, briefly spiked up above $2,000 an ounce when the war first broke out, and since then it's just been digesting, working off that oversold or overbought condition. And similarly for oil, you see a big spike and then sort of this retracement that's been playing out as the world takes a collective breath and adjusts. And, I think that's probably, it's a good mental model to apply for all of these things, because just because something is in the news cycle and all over the headlines, it's about the second derivative. Markets adapt pretty quickly. People adapt pretty quickly, especially now that people are becoming used to having to adapt to major situation-changing events on a regular basis, because the world is going topsy-turvy. If the second derivative is negative, then markets and attention will begin to decline, I think.
Yeah, it's funny too, because I was talking to I thought I was talking to a Polish contact today, and it turned out I was walking into a video podcast that I wasn't prepared for, so I looked like Art Garfunkel on the broadcast or whatever. But it was funny though, because for us, I think the war it's fairly far away. It affects us at the pump, but it's sort of not front and center. And I was like struck by just how visceral it was for them in Poland, because he was talking about how he doesn't know a Polish family that hasn't accepted Ukrainian refugees into their home, and there's like millions of Ukrainians still around and like looking for work, and they're all terrified that the Russians are going to cut off their natural gas, or the Russians are going to come for them next, or maybe the Russians are going to go to Moldova next. And it was just kind of a gut check for me, because I don't know. I guess it's the benefit of being separated from the oceans. But for those that are like near Russia and Ukraine, I mean, the war is still just as present, if not more so, than it was before. But I think markets and the West in general, it's just kind of we've acclimatized ourselves to it, I guess.
Yeah, I mean, that's as you've pointed out recently, talking about Latin America in your piece. That's part of the benefit of just being away from all of this stuff, physically separated. It's funny. My wife, who is French, she always points out. She says, "You Americans, you're so oblivious about what's going on in the world. How could you be so ignorant? You're so just wrapped up in your own continent." And I always say to her, it's because we're just physically removed from everything. And it's not just the United States. Like if you go to Brazil, for example, Brazil is very inward focused as well. It's not nearly as global oriented in what it pays attention to as many European countries are, like France, who they have to pay attention, because you never know when the tanks are going to be rolling over the Northern European plain, right?
It's funny you say that, though. Well, it's funny you say that for two reasons. The first is, last weekend, or last Friday, we're going into the weekend, and I'm thinking about Macron and French elections and Le Pen and all this other stuff. And first of all, doesn't that just feel like an eon ago? Like it just feels like it happened almost a year ago, even though it was just last week. And for a second, I was really afraid Le Pen was going to be able to pull a rabbit out of her hat. But it's also funny because one of the things I noticed this week was that Brazil, and specifically the economy minister there, was talking about how the Europeans are interested in reviving the free trade agreement with Mercosur, which has been dead ever since the French said they didn't like how Bolsonaro was treating the Amazon, which was code for they were afraid that Brazilian agricultural exports were going to hurt French farmers. But they have to virtue signal like sort of appropriately. But it's funny you just brought up France and Brazil, because that was one thing that happened today that caught my interest.
It's interesting too, because the Brazilian balance of payments and the FDI numbers came out this morning for the month of February. And I was surprised because, the Brazilian economy has not done well over the last 5-6 years, of course, but even more recently in the post-COVID period, as you know. But the FDI, the foreign direct investment, over the last 12 months has really started to turn upward, which is a little surprising and more positive than most people, I think, are assuming.
Yeah, no, I mean, I think Brazil's the center of gravity in Latin America, but I mean, both anecdotally and in some of the consulting work that I do, I mean, it's everybody's thinking about Latin America now. It's just about finding the right places, and it's hard to find. If Argentina is going to continue to be a basket case, like there's not really a whole lot of options on the table if you're trying to think about Latin America.
Yeah, and in the currency market, the Brazilian real has been shockingly strong in the last few months. It's pulled back pretty sharply in the last few weeks as all the currencies sold off in unison. But if you look, we were touching 4.6 against the dollar very recently, which I think was a big surprise to a lot of people. And it's not just commodities, because that was a trend that was sort of in place before the Russia-Ukraine conflict broke out. And, the thing that catches my eye is Mexico too. The peso has been remarkably stable. All currencies are getting sold heavily, especially in the last 2 weeks. All of the European currencies, look at the British pound, for example, just getting crushed. And the peso, the mighty peso, is looking surprisingly strong. And Mexican equities are looking surprisingly strong. And that's not a commodity story. I don't know. Do you have any thoughts about what could be brewing in Mexico that the market is sniffing out?
Yeah, we've I've had this on the list to talk to you about in research calls for the last week or two, and we've always run out of time. No, I think I'm getting increasingly more interested in Mexico. You're right that it's not a commodity story. To the extent that Mexico has commodities, they're actually really bad at it. Their oil sector is bringing the economy down, not bringing it up, because of years of just sort of bad bureaucracy and bad management and bad policy and you name it. But if you're an American company and you are nearshoring because you can't afford to just reshore, nobody can afford to bring everything back. Mexico's a really nice place to go. And there are a lot of concerns with Mexico, but I think the other thing that has happened is that the sort of aura, I don't think it's an aura of invincibility, but the aura of sort of fear around President AMLO, I think people have started to realize that the president has no clothes anymore, that he has sort of, shot his shot. He's done what he was going to do. He doesn't have the supermajority in Congress anymore. There's still things he's going to do that are going to be sort of bad for business interests and things like that, but he's only going to be around for another couple years. And there's really nobody who's going to take up the mantle from him that I can sort of see on the horizon. So you take away all that political risk, you have all this interest in nearshoring or reshoring. I assume that's part of the story. The flip side of that, though, is, and this really depends where you are in Mexico. Understanding the rule of law, having predictable access to the rule of law, that's not so great in Mexico. And part of that is a cartel story, although I hate reducing Mexico to cartel stories, because when you just read about Mexico in the Western press, it's either about AMLO or it's about cartels. But some of that's very operative. You can't just throw a dart, you can't just throw darts at Mexico on the map and say, oh, I'm going to throw my factory here. You have to be really, really intentional about where you're going to be within Mexico, because some places really are unstable. And they're also facing a lot of pressure from migration from Central America and the Caribbean and things like that, folks that either want to be in Mexico or are wanting to come up to the US. So those are both kind of concerns. But, the reshoring, nearshoring narrative is there. And I think the AMLO is not everything he was, or that AMLO's power is finally weakening. I think those are both pretty good fundamentals that make people optimistic about Mexico going forward.
So as recently as last year, I remember in the Global Situation Reports, you were writing pretty regularly about cartel violence, the rising power of cartels, especially around, was it the police commissioner in Mexico City? I forget who exactly it was, when he was assassinated, and that was a big change from what had come before.
Attempted assassination. And that's the thing. You could, at Stratfor, we had a product that was literally just, it was called the Mexico Security Memo, and you could fill it up weekly with all the crazy things that cartels were doing every single week. I usually only put things in our sort of weekly roundup for CI clients. If something, if it's really, really big, if it's a change in degree of the violence, or if it's in a place that is different than before. And seeing
So, so what is
cartel
the
violence.
status of that? I'm sorry. What is the status of that now? How would you weigh that? What you had seemed to identify as sort of an underappreciated risk against the other positive developments on the other side that you just spoke about with AMLO and those issues.
Well, the thing, like last year, the thing you brought up, I was pointing that out, as you rightly said, because seeing that level of violence in Mexico City was really weird. And that turned out not to be a trend. It just turned out to be kind of a one-off thing. There is a lot of cartel violence raging in Mexico. There's a lot of competition between some of these rival cartels. They're splintering and sort of, claiming territory for their own little fiefdoms. But overall, what I would say is that it doesn't pose any kind of systemic risk right now. It's really more, where are you in Mexico? So like when you're thinking about where you want to be in Mexico overall, if you're a multinational corporation and you want to locate your factory, then you have to be really intentional about where you are, what the local power structures are in the places that you're doing things. And some places are better than others. And the weird thing about Mexico, though, is that the sum is greater than its parts. So yes, you have parts of Mexico that are crazy, that I would never advise, a company to do things in. But as a whole, Mexico is fine, because there are other areas where no, there really is predictable rule of law, and there is good infrastructure, and there is access to the United States and all these other things. So overall, the cartel violence is not preventing Mexico from realizing its potential. I'd also just say, in some ways, it's I'm not an AMLO hater. I think he's done some really interesting things. I think he's done some good things. I think he's done some bad things. He really thought he was going to be able to change the cartel dynamics by focusing less on policing and less on militarization and these things, and more on, he was talking about legalizing drugs maybe, or about reconciliation or forgiveness, working people into the system. None of that has gone according to plan. And now he has this new National Guard that he's setting up, that is supposed to be in charge of police going forward. So in that sense, I think that's sort of a negative indicator. But overall, it doesn't affect Mexico. It's just sort of part of doing business there.
And have you ever looked kind of structurally at cartel violence or organized crime violence, and how that works in terms of the power of organized crime in general? So what I mean is, there was a really good piece in the Financial Times a few weeks ago that was a deep dive on the organized crime and gang situation in Brazil. And in contrast to Mexico, it was essentially pointing out that violence has subsided in many areas, because there's a fairly clear dominant gang that has emerged. And, they're very well organized, they're very well resourced, they're moving internationally and all these things. Do you think that, how do you think about the rise in violence, or monitoring the levels and sort of the shockingness of violence in a place like Mexico, and what that says about, the actual power of cartels? Is that negatively correlated with the power of organized crime, that they fight more when they're less powerful, and they fight less when things are going well for them? Or how does that work?
Yeah, I mean, with the proviso that I'm not an expert on this, although I have done some significant work on this, because I've done some work on Mexico in general, and you just have to familiarize yourself with this when you're doing stuff in Mexico. In the late 90s, early 2000s, Mexico was kind of what you just described with Brazil. There were a couple key cartels that kind of ran the show. And then what happened was, the Mexican government and the U.S. government funded them to do this and gave them lots of weapons and support to do this as well, decided they were going to declare war on the drug cartels. And what that did was, it did weaken some of those big cartels, but it didn't get rid of organized crime at all. It just made it so it was kind of a free-for-all. And today's fractured cartel landscape, there isn't sort of this one or two or three big dominant cartel to worry about, but there's all these smaller splinter groups. And it's bad because in some ways, and I'm not trying to romanticize the larger cartel groups here, but those groups were more powerful. So there were certain kind of established norms and red lines that you didn't cross. and a lot, and the attack in Mexico City, the attempted assassination in Mexico City was an example of that. Some of the extreme levels of violence that you see and are other examples of that, where you've got these smaller cartels that are fighting for turf, that are trying to make their name for themselves, that are more violent and breaking the rules and breaking the norms and don't care. And I think that's one of the problems in Mexico, and it's been a failure of policy. And it's difficult if you're the Mexican government or if the U.S. government, because you don't want to say that's okay. You don't want to say, all right, well, let's go back to big cartels. You sort of can't put that genie back in the bottle. But then at the same time, if you just continue to play whack-a-mole, you just kind of make the situation worse. So it's sort of a damned if you do, damned if you don't situation.
Mm-hmm. And I want to ask you, not to totally switch continents here, but I wanted to ask you this all week and I didn't get the chance to. So I've been thinking a lot about Iran because I'm reading Herodotus's histories, and incidentally, it's funny how these connections come up in seemingly unrelated things. But I'm also reading the biography of Mark Rich. I told you this, who in the 70s, his first big deal that he struck, the way that he really established himself as an independent commodity trader, was he brokered the pipeline between Iran and Israel. And because Iran needed an outlet that bypassed the Suez Canal. And it just got me thinking about Iran. And I would love to hear your thoughts, because we've talked about this, but not in the last week or two, of what do you think is the dynamic there? Are we really going to see them start to be rehabilitated back into the global system because we need them? Or is that process going to be sabotaged? From my sort of ignorant view, like, I see the amount of potential that they have, and just looking at the position that they've played historically as this great, regional power, and sometimes more than that. And now they're so diminished. How sustainable is that, do you think?
Yeah, well, I'll try to answer that question concisely.
You have 2 minutes.
I have 2 minutes? Okay, that's good. First of all, I'll say they're diminished in some ways, but in other ways, they're not diminished. Like, if you go into like one of the last trips I did before the pandemic, I was in Uzbekistan. Like, it was Persian culture that people were like gravitated towards in that part of the world. So like Iranian soft power is very, very strong, and the cultural norms that come from their previous eras of being a great power, like it's all still there. I'll answer your question first by just sort of noting what the countries around Iran are doing right now. So for me, one of the things on my list, this week on my list, was Erdogan going to Saudi Arabia and talking about how he wants to have brotherly relations with Saudi Arabia going forward, which, listeners probably don't know this. That's a huge deal, because Turkey and Saudi Arabia have basically not been talking to each other ever since the Saudis dismembered Jamal Khashoggi in their consulate in Turkey. And Erdogan really didn't like that. And then the Saudis imposed a boycott on all sort of Turkish exports. And it's been really, really chilly ever since then. And the only reason not the only reason, one of the key reasons for Turkey and Saudi Arabia to make nice is if you're worried about Iran. Now, I've talked to a lot of Turks and a lot of Iranians who say, no, Turkey, Iran, we can be friends, we can be pragmatic. There's nothing in their history that says that that's going to hold. These guys are usually competing with each other, and the Kurds and the Arab groups in between them are usually the ones that get used as the pawns in sort of that bigger competition. So I think when you're looking at what's happening in the region, some of these regional realignments, I think, are worried about Iran doing exactly what you're saying, which is becoming a part of the global system, getting some of that economic wealth, being able to project political power in more typical ways because they're not so isolated. The problem for Iran, and I think I'm at a minute 15. So I would say the problem for Iran is that I don't know if that political system works. I mean, it's not, if they're Iranian listeners, they'll get upset at what I'm about to say, but I don't think this is throwing shade. I think this is just an accurate reflection of what they are. It's a theocracy, and it's a democratic theocracy. Like, there are elements of democracy in Iran. You can't just say that there are no votes ever and that people don't get to express themselves at all. It's this weird sort of bifurcated system where you have a democracy functioning on one side, but then you also have, this revolution that is protected by the IRGC on the other side, and the Ayatollah gets a veto power, but then the president also has to do things, but then the Ayatollah sometimes picks the president. I mean, it's just like this really convoluted mess. And I don't think Iran can really embrace its true potential until it figures out where it's going from there. And it hasn't been on a great trajectory there. Um, I think the optimistic argument or the bullish argument is that if you work them back into the global system, if all that capital starts flowing into Iran, that it's really going to be the business interests that are going to outweigh this obsession with, oh, the West is against us. We have to purify the state and we have to have this weird form of Shiite theocracy governing everything. But, if the IRGC continues to sort of metastasize in the Iranian economy and claim all this stuff for itself, then not that much is going to change, and they're just going to be isolated, and some of these other countries may be able to hem them in. So that's kind of where I think it's going. I do think eventually they're going to get worked back into the global system, but this week also, I mean, the Biden administration finally started talking about, we thought there was going to be an Iran deal by now. It hasn't happened. Do we need to start pivoting? They started talking to the Israelis again. So I think there are some doubts about whether Iran is for real. And that's probably because those conservative reactionary elements within the regime are afraid of what happens when capital comes flooding.
And do you think it's, just thinking about what you just said with Iran, so, I really love Stephen Kotkin, the historian of Russia and China and authoritarianism more generally. And recently he has been talking about China and political reform and how we were so wrong to think that opening them up economically or incorporating them into the global economic system would ultimately result in political liberalization, which obviously never happened. And the point that he makes is that in authoritarian societies like that, reform is liquidation. I think is the term that he uses, where if you open the door just a little bit, the door swings wide open. And essentially, you cannot have sort of incremental changes to regimes that are dependent on, I don't know what the right word is, but repression or non-liberal frameworks to function. Do you think that that's a similar case in the Iranian system? Like, is it possible for them to be rehabilitated and sort of reconnected with the global trading system and the global economy and protect, for the regime to protect itself and not have to change and not undergo huge political volatility as a consequence of that?
That's a great question. I mean, Iran is very different than China or Russia, where some of those ideas that you were talking about were incorrectly applied. And one of the things I would say is that, like, this version of Iran is really a historical aberration. Like, Iran does not have a long history of authoritarian government. If you think about Iran, like if you're reading Herodotus, then like one of the things that made Iran and ancient Persia so powerful was they kind of let people do what they wanted to do. They created this large empire, but it wasn't like they were telling everybody how to live. It was, no, we're the power and you're going to pay taxes and we're going to do business, but you can have your kind of local religions or this, that, or the other thing. We're not going to fool with you that much. They were much, and that's one of the reasons their culture and their language and their commerce was able to spread through such a large area, and why the remnants of that soft power is still there. So I think the way I would respond to that is, and the thing I say about Iran all the time is, Iran's nature, or at least, nature is the wrong word, but Iran's history tells us that Iran wants to be a nation of commerce. It wants to be a nation that lives and let lives, and kind of, it wants to be a powerful nation as well, or a powerful empire as well, but it has space for letting other cultures and societies live alongside it, because it thinks about commerce and is open to commerce in a way that Russia never has been, because Russia is this massive continental thing that they have to have authoritarianism just to keep the thing together. China always cared more about social stability and centralized control than it did about just about anything else. They literally viewed themselves as the middle kingdom because it was just them and everybody else had to come pay tribute to them. That's not Iran. Iran wants to be out in the world doing things. So I don't think that Iran can really live up to its potential and keep the current political regime that it has. I also don't want to just be one of these white American dude bros who's like, well, here's what Iran really needs. It needs to like liberalize and all this other stuff, because like half the reason Iran is the way it is because the CIA was doing that and propping up, the Shah and all this other stuff, which was really self-defeating. And I think in some ways what happened in Iran is a result of U.S. meddling and Western meddling in Iran in the first place. But I think you're exactly right. And I think one of the reasons Iran has struggled so much is because it has this kind of bipolar disorder in its government itself. You've got this religious establishment that has a tanglehold or a toehold on power right now and wants to keep it and is trying to acquire more and more of it. But then you have the traditional business classes who they were cool with the revolution at first because they thought it was a path to money, but now they're, well, I can't do what I want to do and I can't make money and this is preventing me from doing things. And yes, I have national pride, but at a certain point, this is too much. The victory of that class is what's going to happen within the overall structure. And I mean, I'm rambling a little bit, but the last thing I'll say is that, Iran wouldn't be pursuing the nuclear deal and normalization if it wasn't coming from the highest levels. So the Ayatollah's on board with this. So he must see that he must imagine that there is some way to try and have his cake and eat it too. But that's going to be very difficult because I think the more foreign capital you let in, the more you kind of let freedom go, the less the IRGC and some of these reactionary elements are going to be able to control things. Which it's very hard in a country like Iran to control things. This isn't like China, so that's I agree. I mean, I scribbled down what you said about reform is liquidation. That's going to be a really tricky balance for Iran to go forward with, and for the Iranian people, I hope they figure it out. I mean, having complete liquidation of some of these structures is not a good thing, kind of in the net,
So here's the thesis, and totally, I want you to rip this apart and tell me why it's wrong, because you understand the history of Iran much better than I do. But is Turkey a potential model for how Iran could manage this? So for example, like the traditional view is, okay, if you liberalize and the commercial aspects of society get more wealth, they're going to have more power, and they're going to naturally gravitate to a more liberal regime, and that's going to be the liquidation part, as we talked about. But if you look at a system like Turkey, they seem to have bridged that fairly well, right? So if you look in the 20s, when Turkey was first really in its early rapid development stage, it was very driven by the center, very state driven. You needed to be connected with Ataturk and his crew to do business. And I guess it's still like that in Turkey. Like Erdogan, everyone criticizes him for doling out contracts to his cronies and construction projects going to the guys who are well placed and towing the line and who are in his good graces. But that's kind of the model there, and it has been for a long time. Is that something where you can see Iran sort of transitioning into a system like that, where like the IRGC, they essentially control everything right now, but there ain't that much to control because they're really getting strangled. Like GDP per capita, last I looked, I think it's like $2,300 per head. That's terrible. That's really, that's very poor. So I guess I'm sort of rambling again, but I guess my question is is that a potential model that Iran could adopt where, yeah, they do liberalize, they do, open up the economy, but in a way where things are still sort of directed and controlled and the goodies are doled out within the existing kind of structures of power and patronage, without losing control, if that makes sense.
Yeah, I mean, that's sort of what Ahmadinejad was trying to do back in the day. Like he was quote unquote privatizing, but when you actually sort of lifted up and looked under the hood at what was being privatized, like it was getting privatized to the IRGC or to his cronies. And this is why I say the point about Iran is a democracy. They do have political transition. So when you went from Ahmadinejad to Hassan Rouhani. Rouhani was much more of a pragmatic, much more like wanted like real privatization and tried to reverse some of the things that Ahmadinejad did. And the IRGC reacted negatively to that. And one of the reasons we have Raisi now is because the Ayatollah thought that Rouhani went too far. And because Rouhani really got caught holding the bag because he invested a lot of political capital in the Iran nuclear deal. And then Trump sort of tore it up in Iran's face. And it didn't go well for Rouhani sort of after that. So I think that is one potential model, but um, yeah, it's going to be difficult to pull off because the more the IRGC gets entrenched, the more they start looking like the Egyptian military than they do sort of this interesting nexus in Turkey between sort of secular capitalist Istanbul economy with interior Ankara more conservative economy and fusing them together. So it's maybe a model, but it feels to me like Iran just has some things to work out internally before it's going to be able to do kind of what you're talking about. And that's in part because and I guess, I mean, the buck ultimately stops with the Ayatollah. So maybe I'm not giving Iran's authoritarian system enough credit, because maybe the Ayatollah really can balance between the IRGC and the Iranian government and the businessmen and things like that. But, the Ayatollah is also really old. He's going to die soon. Who knows who's going to take over and what the next leader is going to think? I'm sure the IRGC has their ideas about who should be able to take over. There have been rumors that Raisi is going to be the one to take over. So it's difficult in a system where it really is, it does stop sort of at the top of the system. Whereas like even in Turkey, even though Erdogan has a lot of power, he could get voted out next year. Like he doesn't get to stay in power just because he's Erdogan. Like he's certainly loaded the deck in lots of ways, but it's not the sort of thing where he gets to rule forever in perpetuity, even if he would like to.
Switching continents again, another thing I wanted to ask you, not to jump around too much, is so I'm looking at markets this week, and here's what I see. The German DAX equity index tried to break down below a very important support line, or a line that has been important for over a decade, and failed that breakdown and is now back above, which looks very bullish to me. The FTSE 100 in the UK, similar sort of thing, failed breakdown, holding above these long-term levels. And all of these markets have underperformed the US by, a country mile over the last decade. But the fact that they're kind of digging in and showing resilience is really interesting. The other thing that I'm watching is, so the Eurozone CPI and the German CPI, inflation numbers came out just an hour or two ago as we're talking, and CPI beat higher than expected. Euribor, which is the interbank, it's like LIBOR for Europe, in case you don't know, has ripped to new highs. So they're pricing in higher interest rates in the Eurozone. There was some commentary today, much more hawkish commentary coming out after the CPI inflation print. Earlier this week, you had consumer sentiment surveys really falling off a cliff in Germany, in France, in Italy. All of that data came out. But the thing that really catches my eye, and this is getting to my question for you, is if you look at the business sentiment surveys that came out, they've all been remarkably buoyant. So in Germany, the business sentiment numbers came out, and they've fallen off, but they actually were better in April than they were a month ago. Mm-hmm. And if you look at Italy, business sentiment was up month over month, and it's barely gone down. It remains at decade highs, which seems like such an interesting outlier to me, that you would have businesses getting, relatively bullish in the current environment, while consumers obviously are not feeling well because of price rises and all the things that everyone knows. What do you think, and then, getting to what I was first talking about, then you're seeing markets looking, somewhat resilient, surprisingly resilient. What do you think people are seeing over the horizon? What's a potential outcome here? Is it stimulus? Is it something positive people might be starting to anticipate from a fiscal standpoint, from a an exports standpoint? What do you think?
Yeah, I mean, I love the way you brought it back. I think this is a good thing to end on in some ways. I'm a little bit biased because I have sort of an analytical perspective and a forecast on this, but like the thing that I would say is that like Europe's going to have a lot of short term pain because of this Russia Ukraine war, but it's like there's going to be such an overwhelming urge to recreate European manufacturing, to bring things back to Europe, to do things in Europe again, and I think it's going to result in a lot more European cohesion than there's been in the last 30 years. Like ever since the European Union started, like the Soviet Union collapsed, there was no big enemy. Their enemies were themselves and their own provincialism. And now you've got all these enemies all around them who are whether it's Russia, whether it's China, and Europe is really looking around and trying to decide what it wants to do. So we talked about Brazil and a free trade agreement with Mercosur. Uh, Von der Leyen was in India, and they're about to open up free trade negotiations with India. The EU is. The German chancellor was in Tokyo this week, which sent shivers down my spine, talking about how they were going to work together to become hydrogen powers, and how Germany and Japan had similar values, cultural values that would allow them to work together. I kind of wonder like what like
Uh-oh.
U.S. officials would be thinking about if they saw uh, like the Japanese and German leaders meeting in 2022 talking about their shared values. So I would imagine that the way I would explain it, and knowing that I'm biased because I have this forecast in the EU doing well, is that for consumers, yeah, this all kind of sucks. Like energy prices are going to go way up, and there's a war on your borders, and who knows what's going on. And the Russians continue to do and say crazy things, and they're going to cut off natural gas and all these other things. But from a business perspective, I mean, Brussels is basically just saying, hey, like we need to do a lot of stuff, and the EU is going to be here for you. And not only that, all of these cities, Berlin, Paris, Warsaw, they're all on the same page. So everybody's going to be sort of pushing in the same direction, and there's going to be a lot of opportunity there. You talked about Germany. For me, I think people were scared this week by the news that Russia was toying with Poland and Bulgaria's natural gas supply, and that was scary news. But I think kind of lost in the shuffle there was that Germany's reduced its oil import dependence on Russia. So not its natural gas import dependence, but its oil import dependence down to 10% in just 2 months. So if it can do that with oil in just 2 months after this war, I mean, how fast can they get off Russian natural gas? And if they can get off Russian natural gas and they can have some energy independence, and sort of Germany and France are leading the way, saying, "Hey, we need to reinvest in Europe becoming a manufacturing powerhouse again and opening up all these new markets because China's not going to be the market for us. So let's go to India, let's go to Japan, let's go to Sub-Saharan Africa, let's go to Latin America." I mean, that's a tremendously bullish thing. Like Europe is still one of the most sophisticated, powerful sort of economic forces in the world when it's on the same page. So that's what I would be looking over the horizon at. Like once you get through this war, Russia's going to be way weaker. China is also dealing with plenty of its own issues, and the European Union is sitting there and seems in some ways to be primed to take advantage. So maybe I'm being too optimistic about that, but that's sort of what I see over the horizon personally.
Well, I think that's our working hypothesis right now as far as Europe. Um, and I mean, the way that I think about it is you just have to watch what the markets are telling you and try to explain it and formulate a hypothesis to explain it that you can then test. And so far, I think, we've been talking about this for a long time, but so far, I think that thesis has been playing out. And, this is a big opportunity for the next 10 years because European risk assets are cheap. And they're especially if you look at something like, I know the UK is a different kettle of fish, or fish and chips, maybe I should say. But, the UK market is extremely cheap, and continental markets are extremely cheap. So if anything starts to go well there, I mean, it's not been fashionable to invest in Europe since ever. I mean, really, since they've been underperforming for 15 years. and then some. So
I guess it sort of depends what you mean by underperforming. I mean, one of my favorite examples to bring up is The Economist, calling Germany the sick man of Europe in the late 1990s, which was, I mean, you can say that Europe's underperforming. The other way to flip that is that, people thought that it was going to take Germany decades to metabolize East Germany. And instead, it was the exact opposite. It turned out to be a major impetus for growth and change. And that was a fairly small sort of geopolitical event. This Russia-Ukraine war, add to it the pandemic, it's a much bigger change. And I think it's changing mindsets and changing psychology across the European Union. And that's really powerful. The flip side, and we joked about this earlier, but I think it's worth saying as the counterfactual, which is just that that French election was also an example of how tenuous some of these things are. Because I come from like the geopolitics background where we like to think that things are fundamental and we identify the things that don't change. If Le Pen had won that election, we're talking about a completely different world. And I mean, Macron won pretty handily. It was like 58%, I think, to 42%. That still is not very comfortable. And there was a hot second there where it looked like Le Pen might be closer, or that there was going to be a protest vote against Macron because people just didn't like him. And if you had France flip, that would have really changed the narrative here. And that had everything to do with just where French voter sentiment was at the particular time. So there is that kind of long-term track, and it was nice to see France confirm that arguably the second most important power, maybe the most important power in the European Union, was still on board with the European project. It was nice to get that confirmation, but it was also a reminder that these things can change very quickly. So things are good right now, but if we get to a year or two down the road and Europe is still squabbling over things and is not able to take advantage of this crisis situation, maybe then it's a different thesis. But right now, I mean, things look good to me. I don't know how European countries don't just look at what's going on and really change the way they've been doing business. And like I said, that'll be painful for the next year or two, but beyond, it should be a major impetus for growth and change.
Mm. Well, our friend Marco would disagree with what you just said, I think, and say that it's the median voter that really is going to determine what happens, regardless of which personality happens to win the election, right?
Yeah, I mean, I probably veer too much on the side of that things can change. But in some ways, it's if the median voter was never going to go for Le Pen, maybe there is something to that theory in the end, that there was that maybe Le Pen never really had a chance. I'm really curious about. I mean, in France, it would be really interesting if they would put somebody up who represented those ideals, whose last name was not Le Pen. I mean, that family. I don't know if listeners have know anything about the Le Pen family. I mean, especially Jean-Marie Le Pen, who was sort of her predecessor, the father, I think. I mean, some really out there noxious views, and in some way, when I talk to people in France, I mean, I was there around 2017 when the last election was, and people were just like, yeah, I mean, the Le Pens are gross. Like, we don't want anything to do with them. But I do think there's something in that populist, anti-European sentiment that does appeal to the French voter. And if they put up somebody who didn't have all that political baggage, maybe they would have a better chance at unseating a centrist like Macron. But I think the Le Pen effect also kind of covers up some of that to some extent.
Well, not to go too far down this, but it's interesting to think about how quickly not only can things change, but the perception of them changes. Because I remember, what was it, 2005, when The Economist had that cover about Germany, and unemployment in Germany was at 5 million. And so the narrative was, oh my God, what a basket case this country is. This is, clearly continental economics at its worst, et cetera, et cetera. And then within 7-8 years, the narrative had been completely flipped, and Germany was this unstoppable behemoth that was dragging along all of these laggards in the rest of Europe. And I find that really interesting from an investment standpoint, and this is something that we've harvested a lot recently, because we've talked about, I mean, just this week we were talking about perceptions of China and how it's considered uninvestable. And earlier we were talking about Turkey and how, there's this perception of Turkey as being this. People just hate Turkey. They hate Erdogan and what he's doing. Right thinking, economist reading, financial market participants really don't like Turkey at all. And I find that really interesting. And I think that's a source of persistent opportunities because, sometimes other models work, and we really get sort of ingrained into this thinking about, hey, there's one way to do things, and it's very easy to be emotional when you're analyzing things and to basically adopt a certain mood toward a country as opposed to really analyzing what's going on. And I think that was the case with Germany, and it's the case with Turkey today. And just thinking about Europe, most of the capital in the world is controlled by people on the East Coast of the United States, and they have a certain view of the world. And in that view, Europe is sort of funny in some ways. Hey, look at their ridiculous rules, and they're so sclerotic and all of this. But those narratives can change very quickly, and I think that's something that I'm really focused on, is identifying what causes people to change their mind about a country, both in the case of Europe and in the case of Turkey. Because Turkey, I don't think the perception can get any worse. So, where are those catalysts to have people turn around and start a different story about what's happening in a place like Turkey or Italy or what have you? That's
or China. Maybe a way to close our first chat here is to say, we were talking about China earlier this week, and apparently all it takes is for Reuters has this report that China is going to host all the big tech companies and sort of let them know that the government helps them, and the crackdown that the West has been reporting about isn't as severe. And like Chinese equities and markets have had this big bounce. Which is mystifying to me. I can't believe you would read a report in Reuters and then want to go buy like a Chinese index fund because you think, oh, now the government is going to support these tech companies. So I don't know. Maybe we'll see next week where it goes, and if it really is just like ping ponging all over the place. Because to your point, everybody says China's uninvestable until Friday morning, and Alibaba's up 10%. I thought it was uninvestable. What's going on?
Well, I guess that's a good way to close it. Is my mentor and former boss, Mark Roberts, who was one of the great short sellers of the world, he always used to say, what we do, forget about all the numbers. That's all. It all is very important, but at the end of the day, what we do is 100% psychology and understanding human beings and how they perceive and act in relation to what's going on, and that's that's why the opportunities are there. We're not algorithms, and you see these sorts of things where people are just responding emotionally, and it's not going to change anytime soon, not in our lifetimes. But that's what makes it interesting.
And hopefully, Rob, for every week here on out, we'll be here talking about this type of stuff, and hopefully people will like to listen. So I'd say this is a pretty good start. We said we were going to go around the world, and we got a little of Mexico, Iran, Herodotus, the Pelicans, and some Chinese equities to boot.
Well, there's a pretty big world out there to cover, so you better buckle up for next week, I guess.
Cool. I think that's it. Anything else you want to say to the listeners, Rob? King of Kings?
No, I don't think so. I think I'm good.
All right, we'll leave it there and say cheers to you all. See you out there. Thank you so much for listening to the Cognitive Dissidence podcast, brought to you by Cognitive Investments. If you are interested in learning more about cognitive investments, you can check us out online at cognitive.investments. That's cognitive.investments. You can also write to me directly if you want at jacob@cognitive.investments. Cheers, and we'll see you out there.